Every trader believes they're studying the market, but the truth is, the market is studying them. Every tick is a test, every candle a question. Do you act from fear or from awareness? This game isn't about predicting movement. It's about mastering emotion, because the market doesn't move against you, it moves through you. You think you're looking at a chart, but what you're really seeing is a reflection of your own psychology, your impatience, your greed, your hesitation, your need to prove yourself right. You can memorize every pattern, calculate every risk reward, and still lose everything if you haven't learned to manage yourself. Trading isn't a science of numbers. It's an art of self-observation. Because in the end, the difference between success and failure isn't your entry, your stop, or your target. It's your state of mind. This is where most traders never look, and that's why most traders never last. But if you're willing to see the market for what it truly is, a mirror of your inner world, then every trade becomes more than a transaction. It becomes transformation. Welcome to Mind Over Markets, a space where we trade not for money, but for mastery. They say the market is a mirror, but most traders never realize what it's really showing them. It's not showing the next price. It's showing you your impatience, your greed, your fear of missing out, your need to be right. Every candle, every tick, every swing is just a reflection of your own psychology projected on a screen you call the market. But we don't trade charts, we trade beliefs. And there's one belief that quietly decides whether you'll survive in this game or not, the belief about how markets behave, momentum or mean reversion. The idea that price continues or that it returns. It's not just a trading style, it's a mindset, a deep psychological lens through which you interpret chaos. Most traders think they're choosing between strategies, but what they're really choosing is between identities. The momentum trader who thrives in movement, in velocity, in confirmation, and the mean reversion trader who believes in balance, in gravity, in the inevitable return to normalcy. But what happens? When your strategy and your psychology don't match, that's when the real pain begins. I once knew a trader named Alex. He started like everyone else, chasing the big moves, drawn to charts that looked alive. He believed in momentum. He believed that when something's strong, you follow it. When it breaks out, you go with it. And for a while, it worked. He caught the highs of Nvidia, the runs of Tesla, the rallies that made headlines. He felt unstoppable until the first time he held a breakout that didn't break out. The market reversed hard, and he froze. He watched his unrealized profit turn into a small loss. He told himself to wait, it'll bounce. But the more he waited, the more it dropped, until the loss was so big it didn't even feel real anymore. When he finally hit the sell button, he didn't just close a trade. He closed a version of himself. The next morning, he couldn't trust momentum anymore, so he flipped. He started fading every move, shorting spikes, buying dips. He told himself the market always overreacts. I'll just trade the mean. It worked for a week. Then one day, a stock he shorted didn't come back. It kept running. And this time the pain was worse. 2 trades, 2 different styles, one common enemy, his own psychology. You see, Alex didn't understand that each trading style demands a different mindset, operating system. Momentum rewards conviction. Mean reversion rewards patience. Momentum traders must accept that they'll often enter late and still win. Mean reversion traders must accept that they'll often look wrong before they're right. But Alex had neither conviction nor patience. He had something else, fear disguised as logic. He was chasing comfort, not opportunity. And that's what most traders do. They switch strategies, but never switch mindsets. They keep applying the same emotional code to a different market environment. They want to scalp momentum, but they think like a mean reversionist. They want to fade extremes, but they feel FOMO like a breakout chaser. So they end up trapped in a cycle of confusion where every loss isn't just about money, it's about identity. Momentum trading says go with strength, believe in continuation. But emotionally, that means accepting discomfort. It means buying when it already looks expensive. It means holding while your instincts scream, take profit now. Mean reversion says be patient. Let emotion burn out. But emotionally, that means resisting the urge to predict. It means watching price move away from you and still staying calm. Each style is an emotional discipline, a psychological archetype. And when you try to mix them, you fracture yourself. The truth is, trading isn't about finding what works in the market. It's about finding what works for you. Your nervous system, your emotional tolerance, your time horizon. These things define your edge more than any technical indicator ever could. You can teach a trader a strategy in a week, but it can take years to teach them self-awareness. Because awareness isn't glamorous. It doesn't make charts exciting. It makes you boring, calm, consistent, slow. And in a world addicted to stimulation, that feels unnatural. But the traders who last, they've made peace with boredom. They don't chase every move. They don't question every pullback. They understand that markets aren't puzzles to be solved, but rhythms to be felt. Momentum and mean reversion aren't opposites. They're seasons, cycles, moments of expansion and contraction of emotion and exhaustion. And your job as a trader isn't to predict them. It's to sync with them. But you can't sync if you're busy fighting yourself. In trading, mindset comes before method. Belief comes before execution. And psychology always comes before profit. Because until you learn to master your internal momentum, you'll keep reverting to the mean of mediocrity. There's a simple truth most traders never confront. You don't trade the market you see. You trade the mindset you bring. Every chart is filtered through your psychology, your fears, your beliefs, your biases. And that's why the same setup gives two traders two completely different outcomes. The chart is neutral. The reaction is not. Let's start with the momentum trader, the one who believes in movement, who believes that strength leads to strength, that big money leaves footprints and following them is the path to profit. To trade momentum, you need faith. Faith in continuation. Faith that trends can stretch longer than logic allows. But that faith is fragile because your brain isn't built for continuation, it's built for safety. When price moves too far too fast, your instinct screams, this can't continue. Your biology wants reversion, not expansion. So momentum trading is an act of psychological rebellion. You're going against your own survival instinct. You're buying high when every fiber of your being whispers, it's too late. You're holding winners when your body begs you to take profit. You're cutting losers fast when your ego pleads, just give it one more chance. Momentum trading is not about charts. It's about conviction under pressure. It's about trusting strength even when it feels wrong. And then there's the mean reversion trader, the one who waits, who believes that extremes always come back, that the market is an elastic band and every stretch eventually snaps. The mean reversion mindset is rooted in logic and patience, in the belief that emotion creates opportunity. It's built on the idea that panic and euphoria are temporary, but value always rebalances. But here's the paradox. Mean reversion traders aren't patient by nature. They're control seekers. They hate chaos. They crave balance, not because they love equilibrium, but because they fear uncertainty. When they see price explode upward, their brain says this is irrational. It must come down. That thought feels comforting. It gives them the illusion of control, but the market doesn't owe them logic. It doesn't owe them gravity. Sometimes irrationality lasts longer than reason can survive, and that's when the mean reversion trader breaks, because patience becomes stubbornness. Conviction becomes denial, and logic turns into a trap. Both mindsets, momentum and mean reversion, are reflections of human psychology. They're not opposites, they're mirrors of the same internal struggle, the battle between fear and faith. Momentum trading requires faith in expansion. Mean reversion requires faith in restoration. Both require faith in something bigger than the next tick. But most traders have faith only in comfort. They stay loyal not to their strategy but to their emotions. They buy because it feels safe. They sell because it feels scary. And they call it discipline. But discipline isn't about doing what feels safe. It's about doing what's right, especially when it feels uncomfortable. The deeper layer of this lies in your nervous system. When you see a chart breaking out, your brain floods with dopamine, anticipation of reward. That's why momentum feels exciting, addictive, euphoric. It feeds your need for validation. But when you see a pullback, serotonin and cortisol rise, your system braces for loss. That's why mean reversion feels calm, safe, rational. It feeds your need for control. One mindset is fueled by desire, the other by defense, and both can destroy you if you're unconscious. Because whether you chase or fade, the moment you trade from emotion, you lose the ability to see the market clearly. The goal isn't to suppress emotion, it's to understand its pattern. Momentum traders must master the art of restraint in excitement. Mean reversion traders must master the art of patience in pain. Two different emotional muscles, both essential, both rare. Here's the secret that separates professionals from amateurs. They don't marry one mindset. They shift fluidly, intentionally. They know when the market is trending and they think like momentum traders. They know when it's ranging and they adapt to mean reversion. But the switch doesn't happen in the strategy. It happens in the self. They don't just flip indicators, they flip identities, from aggressor to observer, from chaser to collector, from fighter to listener. Because markets speak different emotional languages in different phases. And the trader who listens instead of imposes survives. To reach that level, you must detach from outcome. You must stop seeking to be right and start seeking to be aware. Rightness is ego. Awareness is mastery. When you chase being right, every loss feels like an attack on your identity. When you trade from awareness, every loss is just information. That's why great traders are calm, not because they feel nothing, but because they understand what they feel. They've built enough distance between stimulus and response to make room for wisdom. And wisdom in trading isn't knowing what happens next. It's knowing what you'll do when it happens. Momentum and mean reversion are two paths to the same destination, self-knowledge. Each exposes your emotional weak spot. Each reveals what part of you resists reality. Momentum tests your greed. Mean reversion tests your denial. Momentum seduces your ambition. Mean reversion comforts your fear. And both whisper the same lesson: you cannot trade what you cannot face within yourself. The greatest traders don't fight the market. They study their reflection in it. They learn the difference between confidence and arrogance, between patience and stubbornness, between curiosity and control. They realize that success isn't about predicting direction. It's about managing identity drift. Because the moment you forget who you are, the market will remind you brutally. So pause. Look at your last few trades, not the P&L, not the entry or exit, but your emotion before, during, and after. Were you chasing movement or anticipating balance? Were you acting from awareness or reacting from fear? That's your real strategy. not the one you write in a notebook, the one you execute subconsciously through emotion. Trading psychology isn't a side topic. It's the foundation, the invisible code that runs beneath every chart, every plan, every click of the mouse. And here's the paradox. The more you focus on mastering psychology, the less you need to control the market. Because when your mind is still, the market reveals everything. Momentum or mean reversion, it doesn't matter. What matters is clarity, presence, equanimity. Because in the end, the only true reversion to the mean is the return to yourself. That concludes part 2. Every trader reaches a moment when strategy stops working, when setups feel random, when discipline slips through shaking hands, when the game that once felt logical turns personal. That moment isn't a signal from the market. It's a signal from your mind. It's the whisper that says the problem isn't your edge. It's your identity. Because identity always wins over intention. No matter how detailed your trading plan is, you will always act according to who you believe you are. If you believe you're inconsistent, you'll find ways to prove it. If you believe you're unlucky, every pullback will feel like betrayal. If you believe you're in control, the market will remind you that you're not. Trading doesn't expose your weakness. It reveals your truth. So what does it mean to make a mindset switch? It doesn't mean switching strategies. It means transforming the internal operating system that runs every decision you make. It means shifting from reaction to awareness, from outcome to process, from fear to presence. It's not glamorous. It's quiet. It's the slow unlearning of everything your ego believes about winning. The mindset switch begins when you stop asking, how can I win? And start asking, how can I stay conscious while I trade? Let's break this down. The momentum mindset. Switch is the ability to trust flow without chasing it, to commit without clinging, to believe without needing to be right. It's the art of surrender. Because momentum doesn't reward analysis, it rewards alignment. You don't predict the move, you join it, you flow with it, you let go of the illusion that you caused it. That's why the best momentum traders look calm, not aggressive. They don't chase power. They ride balance. Their strength comes from acceptance, not adrenaline. The mean reversion. Mindset switch is the ability to sit in uncertainty without trying to control it, to see imbalance and wait, to understand that your job is not to make the market return, but to observe until it does. That requires humility. The humility to admit that you don't decide when the rubber band snaps. The humility to accept that the market doesn't owe you symmetry. The best mean reversion traders are not geniuses of prediction. They are masters of emotional neutrality. They are comfortable being early and disciplined enough not to add. They understand that balance is not forced, it is allowed. In both mindsets, the common thread is emotional discipline, not the kind that suppresses emotion, the kind that transcends it. True discipline isn't about control, it's about awareness. Control says I must not feel fear. Awareness says I feel fear, but I choose how to act. Control is resistance. Awareness is power. When you act from awareness, you break the loop of overtrading, the loop of revenge, the loop of hesitation. Because awareness creates space, and space creates choice. So how do you train it? Start by slowing down, not the market yourself. Before each session, take a minute to feel your state. Are you restless? Are you confident? Are you chasing redemption for yesterday's loss? That awareness alone can change everything. Because trading doesn't demand perfection, it demands presence. Every decision made unconsciously is a leak in your edge. Every emotional impulse executed becomes tuition paid to the market. But every moment of awareness is profit that can't be measured in dollars. Another part of the mindset switch is learning to detach from outcomes. Every trade has three possible results: win, lose, or learn. Only one of them is in your control: the learning. But ego hates learning. Ego wants validation. It needs to prove it's right, and that's why most traders sabotage themselves after a win, because validation feels like safety, and safety kills curiosity. You can't grow when you need to be right. You can only repeat. So the next time you close a green trade, don't ask, how much did I make? Ask, did I execute in alignment with my process? That's how professionals think. They measure success not by profit, but by consistency of mind. The final piece of the mindset switch is integration, bridging your internal world with the external one. You can't trade flow if your life has none. You can't trade patience if your habits are chaotic. The way you manage your time, your sleep, your focus all mirror the way you'll manage a trade. Discipline isn't something you turn on when the bell rings. It's a lifestyle that echoes into the chart. The stillness you bring to your morning is the same stillness that will save you when volatility erupts. Trading is never just about money. It's about state. Your internal state is your real capital. Protect it more than your account. And as you evolve, you'll realize something paradoxical. Momentum and mean reversion aren't two opposing systems. They're two halves of the same cycle. Momentum expands energy. Reversion restores it. Momentum is the inhale conviction action movement. Reversion is the exhale patience reflection renewal. The market breathes. And you as a trader must learn to breathe with it. Breathe in conviction. Breathe out attachment. Breathe in opportunity. Breathe out ego. That rhythm, not your system, is where mastery lives. At some point, you'll stop calling yourself a momentum trader or a mean reversion trader. You'll just be aware of when to act and when to wait, aware of when the market is running and when it's resting, aware of when your emotions are whispering and when they're screaming. That awareness is freedom. Because freedom in trading doesn't come from financial independence. It comes from psychological independence. The moment you no longer need the market to confirm your worth, you've already won. In the end, every trader must make a choice, not between strategies, but between identities. You can be the trader who reacts to every tick, who switches systems, who blames volatility, who chases comfort. Or you can be the trader who adapts, who watches, who listens, who evolves. One trades from fear, the other trades from flow. One is ruled by the market's noise, the other moves with its rhythm, and only one survives. Remember this: you don't become a better trader by finding a better setup. You become a better trader by becoming a quieter mind. Because when the mind is still, momentum reveals itself, and when the heart is calm, reversion feels natural. Master the self, and the market follows. This is the real mind over markets. In the end, every trader faces the same truth. The market was never your opponent. It was your teacher. It showed you where you chase, where you fear, where you overthink, where you still need control. It humbled your ego, tested your patience, and revealed the parts of yourself you refused to see. Every loss you've taken was a message in disguise, a reminder that discipline is not punishment, it's freedom. Because mastery doesn't come when you stop losing. It comes when you stop reacting. The charts will keep moving. The noise will never end. But you can be still, still enough to listen, still enough to wait, still enough to trade from awareness, not emotion. When you reach that stillness, you'll realize something simple: you never needed to control the market. You only needed to understand yourself. That's the real edge, the one no algorithm can code, the one no backtest can prove, the one that turns trading into a mirror of consciousness. So breathe, reset, and remember, it's not about momentum or mean reversion. It's about returning to presence. This is mind over markets. Trade less with fear, trade more with awareness, and let the market show you who you truly are.